This week's number 5. Rupert Murdoch is engaged to be married for the 5th time at the age of 92. What is the key to a successful marriage at 92? Have sex in different locations. Welcome to Prof G Markets. Today, we're discussing Credit Suisse and UBS, the $1 million bet on Bitcoin, and Blank Street Coffee's latest funding round. Here with the news is someone who needs to carry the show today because Daddy went deep in the paint last night. That's right. He's in LA. When the dog is at the Beverly Hills Hotel, he goes to the Polo Lounge and he starts ordering a lot of alcohol. And I am hurting. I thought that the edible would help balance it out. It didn't, Ed. That was not a good decision. It was as if I was making my decisions drunk. So I am hurting, and you need to carry this bitch called Prof G forward. All right, all you. Wait, okay. I have another joke. Let me try my other joke. Hold on.
Okay.
This week's number 5. Rupert Murdoch is engaged to be married for the 5th time at age 92. Ed, quick question. Should you be worried that your fiance has sucked 100 dicks? Or is my fiance overreacting? That's good.
No comment on that one.
That's good.
Sorry, man. Because it was about you, so it's fine.
There you go. All right. So, okay. Ed, break it down, my brother. Take your time. Take your time.
By the way, Drew told me to ask you about the Michael Jackson suite.
Yeah, I'm at the Beverly Hills Hotel, and I may never get to stay here again, but I'm in a room that they all call the Michael Jackson suite. And I'm like, why is it called the Michael Jackson suite? And they're like, see the door. It's actually on the ground level. And they're like, see the secret entrance that people can get in and out of easily. And that's like Michael Jackson, like this room. And I'm like, well, that's uncomfortable. Yeah.
I thought it was going to be that he stayed there. Maybe
well,
he
yeah,
did too.
That's the point. Ed, seriously, Ed. Wow, some critical thinking going on there. Yeah, I think the implication is that he stayed there and had visitors that didn't want to come through the front door. Anyways, I'm in the.
That's crazy.
I'm in the
That's
Michael
crazy
Jackson
they told you
suite. Yeah, I'm wearing one glove. I'm sorry. Go ahead.
Let's get into it. Let's start with our weekly review of market vitals. Barring a brief drop after the Fed's interest rate decision, the S&P 500 gained through most of the week. The dollar fell, Bitcoin climbed above 28,000, and the yield on 10-year treasuries reached as high as 3.6% before falling after the Fed's announcement. Shifting to the headlines. The Federal Reserve increased interest rates by 25 basis points, squashing hopes of a pause in rate hikes amid this banking drama. Still, Powell indicated the rate hike campaign may come to an end sooner than previously anticipated, and notably, a statement from the central bank read, quote, "The U.S. banking system is sound and resilient." Meanwhile, inflation in the UK rose 10.4% year over year after slowing for 3 months straight, and the Bank of England also raised rates by 25 basis points. Back in the US, home prices fell year over year for the first time in more than a decade. Median existing home sale prices dropped 0.2% in February from a year earlier. Mortgage rates also declined to almost 6%. That's down from a high of 7% towards the end of last year. Google's AI-powered chatbot Bard finally rolled out to the US and UK public. That's 6 weeks after Microsoft launched its Bing AI engine. Currently, Bard is a standalone web page. It's accessible through a waitlist, but it has not yet been integrated into Google's search engine. Amazon is laying off another 9,000 employees in cloud computing, advertising, HR, and Twitch live streaming. That's on top of the 18,000 jobs it cut in the winter. The stock actually fell 1% on the news. It also fell after its previous round of cuts. But by comparison, both Meta and Google stock prices were up around 5% after they announced their layoffs. And finally, TikTok's CEO Shou Chew went before Congress to testify on the app's data privacy as well as their Chinese ownership. Lawmakers have increasingly called for the app's banishment or sale in the US, but Chew said he's seen, quote, no evidence that the Chinese government has access to TikTok data. Congress was not convinced. Scott, what's your take here?
So in order, you call this, I thought that there wouldn't be a rate increase, and then as you pointed out, there might be sort of this Goldilocks raise. And to be clear, this Fed meeting wasn't about inflation. It was about trying to calm the markets. And what was interesting here was, I'm sure they decided, or the Fed and Chairman Powell decided, the way to calm the markets around the contagion was to pretend that you were not panicked. And the way you signaled that you were not panicked was that you go ahead with what was probably an expected rate hike. And he moderated it. My guess is they were planning on 50 bips. I think he's got his mojo. You know, inflation at 10% in the UK, what is it, 6% here? When people complain about inflation, or the right tries to say, you know, Americans are suffering at the Biden policies that have resulted in hyperinflation. You know, our inflation is less hyper than anywhere else in the world. This is a global phenomena from essentially stemming from two things: massive stimulus from every Western nation as a function of making sure walking back the economy from the brink or potential brink in during the novel coronavirus or during the pandemic. And in hindsight, we all overdid it. But what people will point out was the risks of overdoing it were much lower than the risks of underdoing it. The risk we didn't anticipate was this inflation. But also, if you want to point, you know, your finger at a culprit, it's Putin who interrupted the food and energy supply chain. So it's a perfect storm of bad things. But it's less bad. It's less bad here. But he still wants to be seen as a gangster taming inflation. He wants to be the guy. His idol is a figure in history, Paul Volcker, because he tamed inflation. And it took leadership to do that. And I think Chairman Powell kind of likes being seen as a leader and doing what he thinks is the right thing. And what is leadership? Leadership is, you know, making progress, sticking to your guns, fomenting change in the face of incredible resistance. And that's kind of what he's doing. But at the same time, again, if he hadn't raised rates, people might have taken that as, wow, now this is the primary concern on their minds, is ensuring that the contagion doesn't get out of control in banks. So this seems obvious in hindsight.
Yeah, it's a good point. I remember reading an article a few days ago that was basically saying Jerome Powell has a choice. He can choose between high inflation or he can choose economic crisis. And, you know, that was what the decision was between 0 and 25 BIP rate hike. And yeah, you're right. It's like he chose neither. That's right. Yeah, it's a great point.
He tried to thread the needle here. He tried to have the Goldilocks interest rate raise. The home prices falling, I think that's a good thing. We could have record home construction over the next 10 years, and we still wouldn't meet our housing demands. And the result is the following: young people can no longer afford homes. And it's not only taking away a great means of building wealth, it takes away something that gives people a certain center of gravity around saving and family formation and a sense of pride. So it's really a shame that the only reason the housing prices went down here was for the wrong reasons, and that is because of on the demand side fell. People can't move. Interest rates, you know, if you have a 3% mortgage, you can't move. You're stuck. You literally can't go anywhere. And so you have a lack of mobility, and you also have new entrants who can't afford to buy a home. One of the most disturbing pieces of data that came out about last year's home purchases was that over a third of homes were purchased for cash. Over half of homes in Naples, Florida, were purchased for cash. So there's a lot of people killing it. Yet at the same time, the number of first-time home buyers was at a record low. So this just continues to indicate this rejectionist, exclusionary culture that increases the value of assets for the incumbents and people who already have assets and excludes new entrants. So I hope that there's I'd like to see some sort of federal legislation or blanket legislation that somehow creates liability on the part of local governments if they unnecessarily delay housing. I think we need to go the other way and figure out a way to streamline housing permits.
Sorry, just a question. Why does a 3% mortgage rate? You said you're at a 3% mortgage rate and you can't move. That means you can't move. Why is that the case?
So I buy a house for $1 million and I borrow $700,000 and I'm paying 3% on that. If I move, I lose my mortgage. Boom, I've got a new mortgage at 7%.
Yep.
Okay, an incremental 400 bips on $700,000 is $28,000 a year in incremental interest. Congratulations. For the same home, you're now paying $2,500 more a month. Mm-hmm. So you can move. I mean, it's really constricting mobility. And I'm an investor in a online mortgage company called Better. And business is way down because no one's taking out mortgages at these interest rates. Now, what's happening is you see demand building. And at some point when interest rates do moderate or come down, the pressure is going to be so great, whether it's divorce, death. What are the three reasons people move? Divorce, death, and I guess marriage, or you're moving for a job. At some point, people are just going to need to move, and they're going to have to bite the bullet, and you'll see the mortgage market come back. But the mortgage business is really suffering right now because it's just too expensive for people to move.
Yeah.
And then with respect to the chatbot, I'm excited that so far they're pursuing a business model that is the key here, and that is the focus of these businesses is on the person typing the query. And the original sin of the internet is the majority of people on the internet, the business model isn't to add value to the person typing in a query or connecting with friends. It's to figure out a way to create this ultimate espionage network on their data and then turn them into the product and sell it to someone else. That is the original sin of the internet. So what's encouraging about AI business models so far is that it's subscription, meaning that the company is trying to add value, not extract value from, to that consumer. So that's very encouraging. Bard, I don't know. I found it kind of hilarious. It was asked whether Google should be broken up, and its answer was yes, which I thought was hilarious.
Where'd you see that?
Someone typed in, in the Fed's case or the DOJ's case against Google to, I think it's split up or make them divest of DoubleClick, I think. It came back and said, give a very thoughtful answer for why it should be broken up.
That's awesome.
Yeah, that really is awesome. The thing that I think is really exciting, there's a lot of questions around to the extent to which you tread very carefully. And I would argue that you need a distinct regulatory body, but you want to let your AI horses run here. And so, for example, Bard has said it's not going to answer questions around medical advice. And I think in a controlled environment with a lot of disclosures, I think it should. And as always, the medical industrial complex, hospitals, systems, insurance companies, pharmaceuticals are winning here by saying, oh no, you need to be careful with this stuff. There's always a good reason for why we can't disperse healthcare out to our smart devices, our smart speakers, and penetrate lower income homes. They could really, in my opinion, really benefit from a total rethinking of the healthcare system where it goes from being defensive to offensive. And it isn't just optimized for the top 10% or figuring out a way to let people in when they become very sick, even though it costs more, Medicare or their insurance reimburses. It's just the whole system is really set up for kind of two things, two stakeholders. And that is the top 10%. If you're wealthy anywhere in the world and you're really sick, you're probably your first choice, geography constraints aside, would be to be at a world-class teaching university in the United States. We have the best healthcare in the world for the wealthy. And it's also optimized for these massive, very politically connected healthcare companies that have, the insurance business is the best business in the world, maybe with the exception of the pharmaceutical business. And they have done a great job of ensuring that every decision we make gets them more money. And if you really want to go tinfoil hat, they're in cahoots with the sugar industrial complex and all of these, the food industrial complex that gives us low calories, very addictive quality, that gives us high calories per dollar spent with very addictive substances and not healthy at all. Get them fat and then hand them over to the medical industrial complex who will make tens of thousands of dollars off of their diabetes. And there is so much vested interest in an unhealthy America, an America that becomes obese and then dependent upon these drugs, that we have been kneecapped by their interest in Washington from creating not only a healthier populace, but a medical system or a healthcare system that's similar to most other countries would have better outcomes with literally half the expenditure. So bringing this back to AI, I would like to see them really go hard at providing medical advice in a controlled environment. There would be some idiots who would do the wrong thing and AI would get it wrong. But that, I think, is the real unlock. And trying to figure out a way to make sure that U.S. always stays ahead in AI. Let's watch it. Let's track it. Let's move in when they get it wrong with a regulatory body that should probably be focused on this. But I do think you have to be a little bit promiscuous and aggressive to ensure AI is going to be like chips, software, whatever you want to call it, for a while, the nuclear bomb, whoever has the advantage in that technology is going to have a huge advantage geopolitically. We definitely want to let our horses run there. Amazon laying off another 9,000 people, big yawn. I'm just shocked the stock wasn't up. But again, they hired, I think, 750,000 through the pandemic. The really interesting news and the clips that are going to be ripping around the internet is going to be the clips of this person who has just been drawn and quartered. And that's TikTok's CEO. I just think that one of the few bipartisan efforts has been to literally beat the shit out of this guy on public TV. And I think that's what's going on right now. We record on Thursdays. But I think it is amazing to me. And I like to think, and we're patting ourselves on the back, we were sort of out in front of this when it was very unpopular. To think about how people responded to when we suggested and urged and advocated for a banning of TikTok just 6 months ago. I mean, you're called a racist, a jingoist. I had a famous journalist tell me call me, say, this motherfucker doesn't know how the internet works. And you're letting Meta off the hook. I mean, just real anger. And it's all of a sudden, everyone seems to have done a 180. And I think there's so much momentum now that I don't think they're going to go for, a governing body or some bullshit like that, or this guy saying he sees no evidence of the CCP. Well, boss, unless you can confirm and validate there isn't, we're not, we're going to go approach this when it comes to national defense from kind of the negative hypothesis. And that is, you need to validate and give us comfort that there's no way it's happening. And there's no way he can do that. There's absolutely no way he can do that. So I think a spin is coming, and that'll be my prediction. I'm circumventing it now, or I'm stealing my thunder now, but I think there's going to be a spin. Your thoughts, Ed?
Well, it's funny that you were saying it 6 months ago, but actually the first guy to say this was saying it 3 years ago, and that was Trump. And, I feel like that we actually got to give credit where credit's due. Like that guy was actually kind of ahead of this, of the issue on this. But it feels like we're now reaching this geopolitical turning point where we're down to completely escalate the tensions between the US and China. Like, I feel like that would be the consequence of this, that we're going to say, no, you can't do business here, which is sort of addressing the elephant in the room, which is we really don't like each other, and we also really don't trust each other, and we don't want to have anything to do with each other, which historically has not been the case from a foreign policy perspective until Trump came in, throwing hands.
I've got these tiny hands.
It was, we have a relationship with them, and, we enjoy having a trade union and all these things. And now suddenly we're like, we don't want anything to do with you. Do you think we're going to see, do you think this would be the turning point? Do you think we're going to finally see tensions rise and maybe something might snap?
So first off, to your point about Trump does, I think if you were to look back on the Trump administration and say, what did he get right? And just by sheer virtue of probability, when you have to make so many decisions and take so many stands on something, you're going to accidentally get shit right. No matter what you think of the individual, it would be impossible for him not to get some stuff right. I think the one thing that it would be hard to say he wasn't ahead of the curve on is what you were saying, but not just with TikTok, but on China generally. He basically used the words, he said, our relationship is asymmetric. And he was right that they had unfettered access to our markets. They picked and choose who had access to their markets. The kind of the symbiotic relationship we always talked about is we buy their goods, they buy our treasuries, but it did get out of balance from a trade policy standpoint. What he screwed up was he got the strategy and the general notion correct. He screwed up on the tactics, and that is he thought, okay, I can carve up TikTok like my birthday cake and hand it out to my friends, including Larry Ellison, my campaign donor. I get to decide what happens to it. And you don't. The president is not an investment banker. He can pass a law banning it or an executive order, but he can't then decide, okay, I'm going to carve it up and hand it out to my political donors. And the thing absolutely went nowhere. And there's a reason why the CCP hasn't blinked first. And that is, just do what we did last time. Let the angry Americans stamp their feet, tear the legs off their Barbie dolls, kick the dog. They'll tire out. They'll move on to another red dot like some ADHD cat. And we'll just wait them. We'll wait them out. And it doesn't look like that's going to work here. What this will do, I look at it the other way. And that is, if China refuses to engage in a spin, and that's, I see, as the only solution at this point, a spin or a banning.
Right.
That will create an additional chill, because China at the end of the day doesn't have a leg to stand on here. It's like, well, okay, let's just distinct of the privacy, distinct of whether we can trust you, distinct of our allegations of you being a bad actor. Let's assume, let's put all this aside. Let's just talk about trade policy. What happened when we took our media platforms and entered into China? You let Google, Twitter, Meta stay here just long enough. Actually, I don't think Meta was ever in there.
Yeah.
But we'll let you in here just long enough such that we'll steal your IP, and then we'll prop up a local entrepreneur and we'll capture the value ourselves and kick you out.
Yeah.
And it's like, okay, so what's good for the goose? So they don't have a leg to stand on. And if you look at, there's just so many things here. Look at their equivalent of TikTok. It's about little kids who are piano prodigies or want to be astronauts. And we get TikTok with, great, really interesting videos on income inequality or how our elections are weaponized. We just can't, there's just no way you can have the CCP, who, by the way, as evidenced in the hearing today, is dictating whether this thing will be spun or not, clearly.
Yeah.
You can have them with a neural jack plugged into the minds or the neural network of the majority of U.S. youth. You just can't have it. Now, my prediction is they're going to do a spin, but if they refuse to do a spin, it will be a certain amount of corporate chaos here, because it's like, how are you going to keep 150 million people, especially kids who are really wily and really technically sophisticated? How do you enforce the ban? Does it create, what happens? Do people start using VPNs to access it? So I would argue that if they don't spin it, it's a signal from Beijing that they are willing to give up $1/3 of $1 trillion to escalate tensions. Because at the end of the day, them spinning it, the only reason it would be an enormous give for them is to acknowledge this tool has real propaganda value. If you don't believe there's a security problem, if you don't believe we should be, or we need to be worried, then why wouldn't you just put this in U.S. ownership such that we could have that security that we need? So I think ultimately they opt for keeping $300 billion as opposed to none of it. But the other observation I would make is that when I speak to firms, there's sort of these kerfuffles at a very senior level at kind of the 50,000 foot altitude, sort of this war among satellites with a Chinese or an American flag on it. But at a ground level where the real air traffic is, I like this metaphor, I should take edibles more. There's, like Nike still does tens of billions of dollars in business and supply chain. Estee Lauder, for God's sakes, Apple, which has its primary supply chain there, the specialty retailers I work with, what you find from them is there's still a lot of entrepreneurs and there's still a lot of amazing companies on both sides of the Pacific that are maintaining a strong relationship, a strong commercial relationship. We are just so intertwined with the unbelievable supply chain manufacturing base that is China, and they are still so dependent upon the world's largest market that engine is still relatively humming. Now, whether this comes down a level and you start seeing companies shut down their operations there, we'll see. But we're still doing a lot of business with China. This gets all the headlines. But I would argue if they don't agree to a spin, to your point, the chill here gets much frostier.
Thanks, Scott. Let's move on to our next story. UBS is buying Credit Suisse in an emergency effort to prevent a banking crisis. This rescue came after Credit Suisse's largest shareholder said it wouldn't provide the bank with any more financing, and the stock immediately fell 25%. Within hours, Credit Suisse had to tap the Swiss National Bank for a $54 billion emergency loan, and eventually the government brokered a deal with UBS to save them. UBS will pay $3.2 billion for the bank. That's a fraction of what Credit Suisse was trading at before the deal. Scott, Credit Suisse has a pretty complicated history. Take us through how this all went so wrong.
It's interesting. When I graduated from UCLA, the most aspirational job was to get into the 2-year analyst program of an investment bank. And they were like good jobs, going to work for Procter & Gamble, going to work for a pharmaceutical company. If you're an athlete or hot, you get to go make more money than anyone, flirting with dentists and selling in some stupid dental supply, or calling on, some, I don't know, general practitioner and selling in your diabetes medication. So all the hot people and athletes went to work for pharmaceutical companies. But the premier job, the kind of like the, Navy SEALs, like senior year in the fraternity. Hi, I'm Scott and I have a job at Morgan Stanley. It was investment banking analyst program. And the 4 premier programs, there's a pecking order. Young people are very brand sensitive because we don't have a sense of ourselves. So we rely on brands, and advertisers love us. Advertisers love young people because people your age are trying to find mates and signal. So they do stupid things. They buy expensive coffee, expensive shoes. They'll spend $400 for Grey Goose versus $300 for Sky Vodka because you think it signals you're a baller and that you're more likely to protect children than if you just ordered Smirnoff. Anyway,
you would never do that.
Oh, I did a lot of that. Oh my God. I was running around with the worst peacock feathers in the world. It's like, oh God, tell them to stop. Anyways, yeah, I'm still going through a midlife crisis. That's a bad news, Ed. The good news.
That was my point.
The good news is I think I'll grow out of it in about 30 or 40 years. Anyways, as I sit here in the Michael Jackson suite of the Beverly Hills Hotel. So effectively, what you have here is the best brand in the late 80s and 90s, or one of them, was Credit Suisse First Boston. The 4 premier jobs out of UCLA were Salomon Brothers, which went away. I think it was sold to Citi at some point. Morgan Stanley and Goldman, still around. And then Credit Suisse First Boston. And just to see this company's fall from grace is really dramatic. The last 20 years, this company's been the gang that can't shoot straight. In early 2020, CEO Tejan Tiam resigned amid a spying scandal, spying on a former employee who had moved to UBS. In early 2021, they registered a $10 billion loss after the bankruptcy of fund partner Greensill Capital, and a $6 billion loss after the Archegos, remember them, default. And then the hits kept on coming. In late 2021, they were fined over a corruption scandal in Mozambique. And then most recently, their annual report was delayed. It's just been a series of terrible decisions. Bad management could never get their act together. So finally, this thing was taken out. It was weak. And the Swiss government acted really crisply and said, sorry, you're selling. Yeah, the shareholders are getting wiped out. Fuck you. You've had your chance for 20 or 30 years in what is the best business in the world, banking. And right now you're a problem. Sorry, we're sending you to boarding school. We're going to sell you. And it was sold just for, really just chump change.
Yeah.
At this point, UBS and Credit Suisse had about the same revenue in 2010. By 2019, Credit Suisse sales were 25% less than UBS's. One thing that's interesting to note is in 2008, UBS was bailed out and Credit Suisse was not. Mm-hmm. And think about this. It was just sold for $3 billion. In 2007, Credit Suisse had a market cap of $90 billion. And get this. And so, you're talking about, what is that? That's a destruction of value of about 96%. At the end of 2022, it had 1.4 trillion in assets under management of 50,000 employees. And the merger of Credit Suisse and UBS will create the 4th largest global bank by assets, with $5 trillion in assets under management and 120,000 employees. And they were actually fairly healthy from a liquidity standpoint. Credit Suisse's common equity tier 1 capital ratio is 14.1% at the end of 2022, which is similar to UBS's 14.2%. The common equity tier 1 capital ratio compares a bank's equity capital, that's its stocks, and reserves cash with its risk-weighted assets. So it's basically a ratio of kind of what's liquid versus what potentially is not liquid or more volatile. And to be well capitalized, banks need to have a capital ratio of 6% or better, which just gives you a sense of what a miracle banking is. You actually don't have to be that liquid to be seen as an enduring bank. Credit Suisse had robust capital and liquidity levels, but it didn't have its customers' trust. This really is an industry run on an intangible emotion. Depositors pulled $173 billion from the bank over the past year and about $11 billion per day last week. And the bank run, again, triggered a liquidity crisis, which triggered insolvency. So this is interesting, and we said this, the wave of contagion is rolling through Europe now. And what's interesting is we haven't heard about that many other big banks. So you would argue so far, this might turn out to be sort of an elegant, fairly low-cost stress test for the American and European banking system. It'll cost, the government has pledged 209 billion francs, or about $228 billion to backstop the deal. That's about a quarter of Switzerland's GDP and exceeds total European defense spending in 2021. So it's going to be expensive. 118 billion will fall on taxpayers. That's about 13,500 per person in Switzerland. So that's like, I think, about 2 days of work for them. Don't they make billions of dollars in Switzerland? But according to the Swiss finance minister, this is no bailout. This is a commercial solution. And what's interesting here is the people that got wiped out were the Saudis. And that is the Saudi crown prince directed Saudi National Bank to invest $1.5 billion in Credit Suisse last year. And that investment gave them a 10% ownership, which implies a $15 billion valuation just a year ago, making it the largest shareholder. And they decided no more. And that's what kind of sent it into Swiss government hands, if you will.
Yeah. I mean, on that point about the Saudis, there are two things I find so strange about this. I mean, the reason this all started was because the stock price collapsed when the chairman of the Saudi National Bank said something. And that is, a Bloomberg reporter asked him, are you going to increase your stake in Credit Suisse? And he said, absolutely not. So that was what caused the downfall of this bank. It was that one statement, which is weird for two reasons. Because one, the largest shareholder brought it all crashing down.
100%.
He's basically responsible for why this happened. But the second stranger thing about this is that statement actually wasn't new. He said the same thing back in October. He said, I have no plans to expand this stake beyond 9.9%. But it's almost like the market was just clinging to any excuse that they could find such that they could bring this bank down. And they ultimately were reacting irrationally. I mean, the information was already out there. We're not going to increase the stake. So to me, this feels like a signal of basically just too much panic, that this is an irrational reaction, that, you know, if they're going to freak out now, they should have been freaking out maybe a few months ago. Do you think that that's a fair assessment? Or maybe do you think, I don't know, Credit Suisse should have gone down?
My dad used to say to me that communication is with the listener. And that is, the same person will have a different reaction to the exact same statement based on what's going on with them.
Yeah.
You know, I was at a conference earlier in the week, and someone got very upset based on his seating arrangement. And of course, it's a dude that would get upset that he wasn't, for whatever reason, didn't see himself as being in the power alley of the seating arrangement, and had the most emotional, inappropriate reaction to the situation. And I said to the person that had to deal with this bullshit, I'm like, this has nothing to do with the seating arrangement. It has nothing to do with the conference. It has nothing to do with you. This is about this individual and what is going on in this person's mind. And you don't know. You don't know why this person is stressed. And I find this is a life lesson. And that is oftentimes when someone gets angry at you or has an outsized irrational reaction to something, just keep in mind, you know, it pays sometimes to be a little bit deaf and also realize this may not be about you. And you don't have to, you know, point out how irrational it is. Sometimes you just want to be supportive and you just want to listen and say, this is more about what's going on with that person right now. Mm-hmm. And stop being such a narcissist. It's not always about you or even the situation. It's about this person is stressed out for probably a lot of good reasons. We all get very stressed out. But if you look at SVB, what happened is everyone was looking for a reason to panic around these banks because of the poor risk management. And with SVB, it got triggered. The panic was triggered by poor communications. The way they explained this capital raise was abysmal, and it spooked everybody. And if the Kingdom of Saudi Arabia, I don't know if it was the Public Investment Fund, if they had said, okay, we know there's real contagion and real insecurity right now, if they had softened that language, if they had said, okay, we've made a huge investment here. We're always available for additional capital when we think it's needed. We have looked at this company's capital ratios, and given that they're as strong as UBS and other banks, we don't feel a need right now to supply additional capital. They could have softened their language. Instead of absolutely not, it felt like executive anger, and it felt like they were sort of saying, this thing is fucked up. We're angry. We've had it.
Yeah.
That is not how you create confidence. And so that tone and that language played a part here. Now, would it have just been kicking the can down the road? Who knows? But when you're in an environment that's all about trust, it's all about emotion, words matter a lot. I would bet in 3 years, when there's a similar situation, we have some sort of large language model, i.e. AI, that says, okay, we have risk of contagion in a financial services company. These are our numbers. This is the situation. What type of phrasing and communication has the lowest likelihood of adding to the contagion, and what type of phrasing and words have the greatest probability of calming the panic?
That's great. Yeah, totally. Yeah, these are basically turning into these giant PR firms, and their job now is just to manage expectations. And one bank that we probably ought to mention that's dealing with this is First Republic. Their stock is down more than 80% this month. They've lost around 70 billion in deposits this year. That's roughly 40% of what they had at the end of 2022. It feels basically identical to Silicon Valley Bank and to Credit Suisse. My original question would have been, do you think this bank will survive? But I feel like maybe a better question is, if you had your deposits in First Republic, would you take them out?
First Republic so far, Ed, is not like SVB. And that is, once the run on SVB started, it went from zero to illiquid or insolvent really fast. First Republic has survived so far. And that is, it's had significant withdrawals, but you had, I believe, the 6 biggest banks put in 30 billion of their own deposits.
Yep.
And it looks like it might be the dam that holds. And that is that this might be the end, or where things turn around or bounce back, because SVB was basically over in 48 hours. And then everyone looked for the next one, and it was Signature. And then everyone looked for the next one and was like, okay, what's a big bank with a lot of assets? It's regional and very focused. Okay, First Republic. Stock goes down, run on the deposits. But it appears, at least for the time being, to be modulating or lessening. So the question is this the next domino, or is this where the virus stops spreading, where it hits a block, where it gets enough capital from big banks and the depositors go, well, everyone was made whole at SVB. There's no reason to think we wouldn't be made whole. So do we really need to panic? And I wonder, I mean, the optimistic case here is that the people that wanted out got out, and the other people that are still in see some sense of security that, okay, worst case scenario, we get backed, we get backstopped. And also it looks like with additional liquidity from these banks that we may be, we've kind of made it through the volatility or the storm, if you will.
Yeah, but 40% is out. And also all of their clients, most of their client deposits are very high net worth individuals. And this is all a psychological game, right? As you're saying, it's not necessarily about the liquidity. I mean, that's the second order effect. The first effect is people's fear and the narcissism about their own situation. Do you know anyone who banks with First Republic who is freaking out about this? Or if you...
I don't. Yeah. I don't. I mean, it's just, again, you can't find a person whose deposits in a U.S. bank they lost. So the downside here might be some inconvenience or people on Twitter or alarmists screaming, but the data shows that you don't need to panic.
Yeah.
I mean, the government on this and any other bank right now is kind of ready just to go, we're seizing the bank, and hello, depositors, you have nothing to worry about. Yeah. They're not going to let, it's clear they've said, we're not going to let depositors, they've just said in it with all of their body language, with all of their press releases and all of their actions, we're backstopping everyone. And we might have to revisit regulation. We might have to limit or extend the ceiling on FDIC. And then the question becomes, well, is there ever really a limit? But if you just do the math and try to tune out the noise, there really isn't a reason to panic. And so, and also, I do think you have a little bit of an obligation, not an obligation. I won't say, I think there's something admirable around trying to be mature and a steadying force here.
Yeah.
I don't, the question is, with everything you do, there's an overlay of what impact does it have on your family, your neighbors, the environment, and your nation. And if there's very little realistic downside, but there to the safety of your deposits, but there is downside to contributing to the panic. And by the way, if you feel insecure about your deposits, you have the rights to take them out. That's good for you. You should be able to do that. But the media and certain individuals adding to the panic here, it's A, not helpful, and B, it's not rational. It's not rational. Try and find an individual anywhere in America that lost their deposits in a regulated bank. Can't find them.
Well, that's a good segue to our next story, which is very highly related. So Bitcoin has risen roughly 30% since Silicon Valley Bank collapsed. Some think it's because of a short squeeze. Others think it's just regular volatility. But the most widely accepted theory is that people are flooding to Bitcoin in anticipation of this larger economic collapse. And there's one prominent figure whose actions support this notion. So this guy, Balaji Srinivasan, a former Coinbase executive and crypto enthusiast, he believes the US is about to enter a period of, quote, hyperinflation. And he's putting his money where his mouth is. Last week, he made headlines after betting $1 million that in the next 90 days, the price of Bitcoin would hit $1 million. Why? Because in his view, the central banking system is on the brink of collapse and the dollar is about to be worth zero. So Balaji has since gone on several podcasts laying out his concerns, and he's published many Twitter threads for his 900,000 followers. Scott, what is your take on this?
You know more about this than I do. The only thing just to go back to our last conversation, what's really interesting is post this crisis, and hopefully we're post-crisis, Americans actually seem to have greater trust in banks. As of March 7th, or as of March, 7 in 10 Americans say they trusted U.S. banks compared to 66% in February. So it looks like our trust in the banking system in a weird way is, if it makes it through the stress test, might actually go up, because I think Americans are coming to the realization that see above, when shit gets real, their deposits are still safe. With respect to Bitcoin, I mean, Bitcoin's having its moment, right? Mm-hmm. It was supposed to be inflation that was going to take it up, or conflict. None of those things really accelerated it. A lack of faith or fear and risk in the banking system, what people think is an attack on fiat currency, that the printing of money here is what really accelerated this decline. It's sort of the perfect storm of good things for Bitcoin, which has seen just a massive uptick. And we have very intelligent, articulate individuals who have a huge vested interest in Bitcoin, have kind of gone all in on it, who have huge followings on social media and are talking up the crisis, if you will, and talking up Bitcoin. I would love to get your viewpoint here, because I occasionally follow Balaji, and I find I like his viewpoint. I just find it interesting. I don't agree with a lot of it, but he's definitely a very bright guy. I'm just curious what your take on all of this is.
Well, I've been researching what his history is, and he basically he came into public view in 2013 when he gave this talk at Y Combinator. And I encourage anyone who is a Balaji fan to go back and watch that video, because it sort of gives insight into what his whole thesis is. And basically what he said, the talk was titled Silicon Valley's Ultimate Exit. And his belief is that the US is in structural decline and we're about to see an economic collapse. And mind you, that's in 2013 that he's saying this. And he suggested that we start what he sort of calls a network state, which is basically a techno-utopia where all of the technologically literate and elite people in Silicon Valley can gather their resources and basically start their own country and basically bail on America, because he believes that the government regulation gets in the way of things, that America is too slow, it's brittle, it's in structural decline. And so he wants out. And one of the vehicles to do that is Bitcoin, because you're not subject to the central banking system. Now, the thing that I find really troubling about this is, just as you said the other day that, recession's been a week away for the past 18 months. In the case of Balaji, doomsday has been 90 days away for the past 10 years. And whether or not, you think he's right, you have to acknowledge the fact that this is a guy who has been investing for the past decade in doomsday occurring. And if it doesn't come true, he's one, going to be wrong and he's going to look very stupid. And two, his net worth is going to plummet because he's put all of his money in Bitcoin, which he's basically told us is a bet on wider structural collapse in America. So it's in his best interest that America fails. He actually wants it to fail. And his vision, his whole dream is that he could start a new country that is just completely separate from America. So I think that is sort of the dark side of this. But, from the audience's perspective, maybe they think, well, I'd rather be safe on this. I'd rather just believe what he says because what if he's right? But I think it's very dark, and I think it's actually really destructive.
Well, there's a tactical point here and a larger point around communications and citizenship and what it means to be an American. And the first thing is, in terms of communications, this guy pulled off the ultimate PR stunt. My understanding is he bet $1 million that hyperinflation would happen in the next 90 days. Mm-hmm. And that's like a big ballsy bet because it's not. And for him to put his money where his mouth is and bet $1 million that we're going to hyperinflation in just 90 days or less, and of course someone took the bet, everyone has heard about this bet, right? Mm-hmm. And it's like, okay, here's this smart guy who is so confident that he's willing to lose $1 million of his own money based on what he thinks is the probability of hyperinflation. So even if it doesn't happen, even if we see some of it, or it creates more panic, more contagion, more thinking, well, maybe I should put 10, 15, 20% of my assets in crypto. Let's assume that he's done really well. He's, I believe, one of the founding CTO of Coinbase. I don't know what his wealth is, but I imagine he has real wealth. By the way, Coinbase, I think, is about to go under SEC investigation. Mm-hmm. Let's assume he owns 1,000 coins or $27 million worth of Bitcoin. If he can get the price to go up 3 or 4%, even if he loses $1 million by creating this signal of panic by his bet, then he wins. He can lose his bet and still win because his holdings, he's done the math. I think this is an incredibly savvy PR move. Yep. Because even if it's just a little bit of inflation, even if it just creates a little bit more insecurity, that's going to take Bitcoin up by more than, call it 3 or 4%, and he will be a net winner here. The broader issue is the following, and that is when Jim Chanos, a famous short seller, takes a short position against Tesla and then starts shitposting Tesla and retweeting my tweets when I say Tesla's overvalued. When Bill Ackman says the arrests are coming at Herbalife, saying it was an illegal pyramid scheme, which was totally hyperbolic. The arrest did not come because he's shitposting Herbalife, trying to talk the stock down. That's one thing. It's an entirely different level when you have an economic vested interest in that results in you constantly shitposting America. Mm-hmm. And I don't know what to do about it. They're protected by the First Amendment. I think they are fairly transparent around their interests and their financial interests. They have a right to do this. But you just think, okay, there is this really dangerous emerging cohort of nihilists, and I think we're talking about this in No Mercy, No Malice, what you guys call quitters. And that is they've sort of given up on America and this planet. They talk about the need to colonize another planet. They want to take us to another universe, even if it's legless. Mm-hmm. They want to start a new economy, a new banking system. And it's just sort of very, quite frankly, discouraging and a little bit even depressing, this nihilist view that some of the most talented, well-resourced people in the world have said, I'm giving up on America as it is. I'm done. I quit. And I want to take us to another universe, or I'm going to bet on my bunker. Something like 45% of people between the ages of 25 and 54 have made some sort of preparations for a doomsday. And part of that is they look at these incredibly talented, smart people who basically said, I'm done investing in America. I've given up on America. I'm quitting. I'm making a big bet on the decline of America. And it's just very, for lack of a better term, it's really upsetting.
Mm-hmm. Yeah, and it also seems so basically ignorant and narcissistic to think that after all this time, after everything that America has built, honestly, after the past several thousand years of society learning about how to create a democracy, how to create a financial system, to have the confidence in yourself to believe, nah, they got it all wrong, I can probably do it better, is just wildly misinformed to me. Bitcoin, you have to give it credit. It is a really incredible technological innovation, but then to extrapolate that to, we're probably better off doing everything on our own. Let's tear the whole thing down. Let's scrap all of our regulatory institutions, everything that we've learned about how to run a gigantic country and democracy. We can probably just do it ourselves and then just get an island in Vanuatu and just start our own Bitcoin paradise. It's just, to me, it's just completely ignores everything that we've worked on up to this point.
So Woody Allen's best film is Hannah and Her Sisters. And I know we're supposed to hate everything that Woody Allen's done, but it's a fantastic film. And he made several good movies. And a decent one was Broadway Danny Rose, about an agent. And this kind of tier 3 off-Broadway agent has this guy who's a crooner, kind of a Frank Sinatra type. And Woody Allen is there for him, showing up at all the shows. I mean, really sticking through all the bad times with this guy. And then the guy hits and becomes famous. And the moment he shows any chance of fame, he drops Woody Allen as his agent, right? This is the mother of all. This is the mother of all dropping Woody Allen, because take any of these individuals. I don't care if you're Elon Musk. I don't care if you're this guy Balaji. Take any of these individuals that shitpost America and are investing in the decline of American civilization, and realistically say, what would be their influence? What would be the size of their jet? Would they be the wealthiest people in the world? Would they have the freedoms they enjoy here to shitpost America? Would they have the ability to build these companies? Would they have the ability to build these unbelievable organizations and platform of influence? What is the one thing that distinguishes them? What is the one input that has taken them from what would probably be remarkable entrepreneurs in any country, but has turned them into icons of massive influence and massive power? That one thing is America. Yeah. And they drop it the moment they hit kind of light speed. It's just, at the end of the day, they're not acquitting themselves of what I'd call a lot of character or patriotism. If you're unfairly jailed in the United States, and there have been a lot of people who've been unfairly jailed, if you grow up and you can't get health insurance and you're kind of doomed from day one because of where you're born or who you are, I can get you wanting to foment a revolution. I get it. You have the rights to be. These guys have no right to be angry. They have no right to be these catastrophists. They've literally said, okay, I'm going to, quite frankly, just be incredibly ungrateful. They're not saving us. Do they think that Americans are going to be better? They're basically saying the world is ending. For those of you who want to get on my ark, and I have a limited number of tickets, I'll sell them to the highest bidder, and a few lucky few get to escape the floods. Yeah. But they're not trying to figure out irrigation systems such that we can all survive. So I find it all just sort of unseemly and disappointing. And I think it all comes back to, well, why are people so receptive to this? And for me, it comes back to this central notion that a 30-year-old man or woman isn't doing as well as his or her parents were at 30 for the first time in American history. So people are very disillusioned, and they're receptive to these arguments of let's quit America. And not only can we quit America because America isn't working for us, we can make money while we're quitting. But let's look at the data around just how bad America is doing. Our inflation is 6%. That's bad. And Canada's is 5%, and Japan's is 4%. It's lower. In France, it's 7%. In Germany, it's 9%. In the UK, it's 10%. Mm-hmm. Our GDP growth is only 2%. But everyone else is somewhere between 1% and 4%. And our unemployment rate is towards the low end. So on a balanced scorecard of how we're doing, much less, let's just ignore that we have the best vaccines. Let's ignore that we're able to fund the valorous Ukrainian army to kick back on an autocrat without putting a single boot on the ground. I mean, let's ignore that we're food and energy independent, right? No one has us by the short ones. We are masters of our own domain. I mean, we are doing so well on every single dimension. So this nihilist view of the United States, it's just not accurate. The data doesn't support it.
Okay, Scott, we've been talking about banking for weeks now. Let's switch gears and talk about coffee. Blank Street Coffee, that's a 2.5-year-old coffee chain based in New York. They just closed a $20 million investment round that included Tiger Global and General Catalyst. That's less than the $67 million that it raised in 2021, but still impressive considering basically no one is raising venture funding right now. Blank Street's business model is pretty intriguing. Each store is an average of 350 square feet, and the coffee making process is almost entirely automated. So that allows them to charge prices almost 25% lower than Starbucks, but they're still really profitable. They've opened more than 40 locations in New York, and they've all been profitable within a month of opening. So, Scott, can we just get your first glance marketing professor branding take? What do you think of this business?
Well, I love it. One, because I love caffeine and I love coffee. I wish, one of the things I regret about growing up is it's amazing that the propaganda you're exposed to and the music you're exposed to somewhere between the ages of like 15 and 24 really get purchase, right? I was listening to Tom Petty and ELO and George Michael in the Cars. And, you know, as long as it's one of those bands playing for me, I don't, you know, I forget everything else. That's fine. Right. And also the propaganda around smoking really had an impact on me. There was a ton of it. And also it ultimately took my mother's life. So I've always been vehemently anti tobacco. And one of the pieces of propaganda that really stuck with me is somewhere we played one of these films in high school about the evils of coffee and caffeine. And it was in Coca-Cola and it was in coffee. And I didn't have a single cup of coffee until I was 40. Oh my God, did I fuck up? Coffee is wonderful. I mean, it is like, and now I wake up and I'm like, I hate everything about the morning except for one thing. And that is my latte with my whole milk. None of this PBS woke bullshit, coconut, whatever milk, just basic whole milk from some cow they're about to slaughter. Anyways, I love coffee. And what's interesting, I love the evolution of coffee. People used to chew on intoxicants or be high, because if you're plowing fields, that's pretty awful work. It helps to be high. And you didn't doing kind of rote manual labor, you could be a little bit high. But then as work moved to more of an information-based economy where you were doing ledgers or calligraphy or you were in information work, you couldn't be high. So they came up with a new drug called caffeine. And Michael Pollan, who is my Yoda on all substances, I asked him in the podcast where we interviewed him, I said, is there a free lunch anywhere? Because I haven't found it. I love the way alcohol makes me feel. I don't love the way it makes me feel the next day. And he said, the closest thing we have to a free lunch is caffeine. That it looks like it might have some health benefits. It gets you going. It makes you happier. It makes you more productive. And it might actually be good for you. By the way, something that really disappoints me on the other side of the spectrum, remember all the studies showing that one glass of wine a night was good for you? It ends up all of that shit has been totally debunked, and any amount of alcohol is bad for you. I'm totally into this guy named Dr. Peter Attia that I found on Tim Ferriss's podcast. It's a fantastic podcast, and Tim does a great job of going very deep with this guy. Anyway, there is caffeine. I love caffeine. Back to this company. This company's brand mission is cultural. Yep. And that is, it pays people, I think, about $28 an hour, including tips. And while I was out there harping around how minimum wage absolutely needs to be increased, that if it just kept pace with productivity, it'd be $23 an hour right now, the market just really did its job. And that is that where you've seen wages accelerate for the first time in like 40 years is at the lower income levels, our frontline workers. So if someone can do a great job and have good EQ and work hard, which a lot of frontline workers do in a food services setting, and make $28 an hour, that's awesome. And the company still does well. And the fact that VCs are funding a company like this that has both a great product and I would argue, kind of good paying jobs for, semi-skilled labor, if you will. I like this a lot. I'm real happy about it. What are your thoughts?
Well, the thing that I was finding interesting is that this is basically the anti-Starbucks. I mean, Starbucks pioneered this whole idea of you go to the coffee store and you sit in your chair and you have high-speed internet and you talk with strangers and you hang out, basically. I mean, that what you talk about, this idea of the third place, Starbucks kind of pioneered that, and they invested in nice decorations and artwork and a cozy setting. Blank Street's basically just done a total 180. They're operating out of these tiny little trucks, 350 square feet. You don't hang out there. You get your coffee. It's automated. 2 seconds. The barista is a low-skilled worker who doesn't need any real training. And then you're out of there. And I wonder if that's sort of going to be the bellwether for where consumer brands are going to start moving, is that actually people just want total efficiency. They don't necessarily want to hang out and chill. And it's funny how the coffee industry it might be about to change. And I wonder if this will make a sort of iconic business case study.
Well, when you guys told me about this, it sounded almost like a meth dealer.
You want to cook crystal meth?
And a meth dealer is, all right, come here. Here's your drug. Give me the money. Now get the fuck out of here. I mean, they don't want you to hang out, right?
Yeah.
Let's do this. You want this drug. I want your money. Let's make this as efficient and frictionless as possible. And that's what this model kind of reminded me of. Now, the business learning here is the following, is that when a company like Starbucks or Amazon is so successful, everybody starts benchmarking everything they do and everyone piles in and invests in everything that Amazon and Starbucks does in every way. And what happens is it becomes like Florida real estate in the sense that business strategy becomes overinvested.
Yeah.
And it creates an opportunity for someone to come in and zag when everyone else is zigging. So for example, Amazon was all about, it's our platform, we make you advertise, we do the fulfillment, and slowly but surely, it's our data, we own the consumer, we get to decide what goes in the box, it's all Amazon branding, and we will dictate your terms, and you're just fortunate to be on the world's largest e-commerce platform. Shopify comes in and says, we're going to zag. You own the data, you own the customer, you own the packaging. We make totally transparent. We are just a service provider. We make transparent everything. We are the anti-Amazon. And the company becomes one of the most valuable companies in the history of Canada, one of the biggest performers or best performers on the NASDAQ. Starbucks says, hang out. It's all about that Italian coffee feel. Stay as long as you want. And someone goes in and says, no, we're the meth dealer. We're the meth dealer. Here's your drug. Get the fuck out of here. And there's always opportunity, and it's inspiring. When everyone's barking up the same tree, when Florida real estate gets overinvested, that's the time to move in and zag.
So, Scott, I was talking to a SoftBank investor last night, and they basically told me that they haven't written a check in 9 months. And they just don't have a job. They're still getting paid. But they sit around doing nothing. And whenever they try to bring a deal to investment committee, they say, no, bad macro environment. We're not really looking for deals right now. But thanks for doing this anyway. The venture market is just totally stagnant right now. But it feels like, you've got a consumer-facing coffee brand that's raising a $20 million round. Do you think that could be the moment that sort of reinvigorates the venture market, especially the consumer venture market?
Probably not. What's going on in the venture market is similar to what's going on in the housing market. And that is entrepreneurs who raised their last round at $1 billion still haven't come to grips with the fact that their company may be worth $200 million now. So just as Bob, who saw, Eric down the road sell his house for $1.5 million at the height of the frenzy, thinks their house is worth 1.5 and won't take 1.2. There's just a standoff in the private markets. And also the venture capitalists have been understandably very distracted with other things right now. And time is on their side. It's not like a deal's going to get away from them because people are piling in. SoftBank will go down as the worst venture capitalist in history. after series of just ridiculously stupid ideas. Oh, this is a terrible investment that makes no sense. I know. Let's shovel another 200 million into it and try and pursue capital as a strategy. It's almost like it's literally like institutionalizing Ponzi scheme. If we keep sending higher and higher signals, if we keep, it's like the ultimate wash trading. If we keep investing at a higher multiple, the greater fool will come in and take it away. This venture firm or SoftBank will go down in history is arguably the worst managed investment vehicle in history that didn't involve fraud. So I remember we had a guy from SoftBank, this lovely young man at the Pivot Conference, exactly a year ago, saying, "We're just getting started," and on stage with some company he'd backed at 3 billion times revenues. It's like, really, just getting started? This shit's insane. What are you talking about? But you're gonna the most encouraging thing about this is that it's great to see venture capital firms investing in great consumer concepts and not trying to pretend it's some sort of technology solution. And that is, there's a lot of opportunities for kind of Main Street startups, if you will, that maybe they don't offer the parabolic returns of a SaaS company, but SaaS has been so overinvested that there might be underinvestment, again, see above zagging when everyone's zigging, in some consumer companies. So I like when venture capitalists get into great consumer companies. I think it's good for the economy and good for job growth. Typically, these companies have more employees per revenue. Typically, these companies have more employees based on the size of the company than tech companies. So I like it when these companies come into the consumer market. But there's still some sitting on your hands for a while here. The market, I think, the private markets are going to stay kind of locked for a little while.
Mm-hmm. Love it. Think different. Thanks, Scott. Let's take a look at the week ahead. We'll see the revised US GDP. We'll also see consumer confidence data for March and the personal consumption expenditures index for February. Do you have any predictions?
Well, I made my prediction. I do believe that the CCP, which is the same as ByteDance, and ByteDance is the same as the CCP, is going to decide that they'd rather hold on to $300 billion than lose $300 billion and lose this propaganda. They're losing the propaganda weapon that is TikTok. I think that's happening based on what I've seen in the hearing so far. And I think on the eve of the banning, or maybe into the first implementation of it, they come to some sort of agreement to spin the asset. So my prediction is this time next year, TikTok is a publicly traded company whose majority of governance and asset holders are U.S. based.
So if they get spun, that means that they're selling it to the public on the public markets. Is there a possibility, you think, of a sale, or not a forced sale, but a negotiated sale? That was what Trump wanted to do. He was trying to get Microsoft to buy them.
Yeah, I don't know who can afford it. I guess, I mean, this is, if I'm TikTok, I'm like, well, as soon as if I'm ByteDance, my attitude is, if we give the U.S. enough comfort that they will let us be an independent company with an independently traded stock, that stock is going to go apeshit in a good way. And so the price they could get from Microsoft under the auspices of solving a problem would probably be a discount or significantly lower than what the thing would trade on as an independent company that had solved this security problem by virtue of the spin. It strikes me that a spin to U.S. investors with U.S. governance and U.S. regulatory oversight around the product and data storage and all that good stuff creates a company that will probably be worth $500 billion to $1 trillion by next year. And I think the owners of ByteDance and the CCP are going to go, no, you don't. You can force us to spin it. You can't force us to sell it to a U.S. company. And I don't know who would buy it for that kind of premium right now. Because even a company like the obvious one, in my view, is Microsoft. Mm-hmm. And Microsoft has about a $2 trillion market cap. ByteDance isn't going to let this go cheap, nor is the CCP. So say it's $500 billion. I don't even know if Satya Nadella would have the backbone to do issue an additional 20% of shares to buy TikTok. That would be largely a bet the ranch type of acquisition. And as exciting as it would be for him, he doesn't need to do it. The company is firing on all 12,000 cylinders. So I think what you have here is the incentives are aligned such that a spin probably makes the most sense. And by the way, I just want to say, everyone I've met at TikTok, they're lovely people, Ed. They're lovely. I think they deserve to be rich. I just don't want people from the CCP elegantly intervening in these algorithms and doing what I would do if I were working for the CCP, and that is put our thumb on the scale of anti-American content. I think they deserve to be rich. I think they will be rich. I think it's an incredible product, and I'll buy stock at some point. But I do think it's going to be. I think it's going to be an independently traded company by this time next year. This video was produced by Patrick Warren. Olivia Rainey Hall is our art director. Sarah Shu is our animator. And George Carty is our video editor. Thank you for watching this edition of Prof G Markets. Please like, subscribe, and tune in next week.